Everybody, Dave here. We are going to do a net worth update. It's October 2019. I've technically never done one of these, and I think this is long overdue. Okay, so we're going to basically look at where basically all my money is sitting. So I know a lot of people that have been following me has seen me pop up accounts here and there, Fundrise. You know, I've talked about silver, I've talked about lending club, money market, brokerage accounts. I've talked about real estate, real estate notes. So today we're going to basically do a breakdown percentage wise and also just look at, how much money I have in all these different investments. So let's go ahead and get started. So let's go ahead and take a look. The first one here, the largest piece of this pie is 42% in promissory notes, okay? Those are real estate notes, taxable, okay? So that's not in a tax deferred account at all. They are taxed, generates me about $39,000 a year, okay? Which is taxed as, a normal rate because it's interest income, all right? So let's just pop that down here. So promissory notes, I got $559,000 in notes. There's 7 notes there total. The largest one being about $160,000, okay? Most of them are investor notes, non-owner occupied investors that own those houses and they're renting them out, all right? With the exception of one, which I actually had a rental property that I converted to carry back for the person that was renting the house wanted to buy it. So I sold him the house and I did a carryback for him and then loaned him the money. So I have $559,000 that generates me about $39,000 of income every year. So that's 42%. That's the largest percentage I have out of all of my net worth there into that. So let's go ahead and look at the second largest piece of that pie, which is 27% there. That's retirement accounts. Okay, those are all tax deferred accounts. Let's go ahead and pop that down here. $357,000 into retirement funds. Now that's broken out into multiple different areas. I have a 401k with the current job that I work for. Okay, there's about $200,000 in there roughly. I have 2 notes as well in a solo 401k trust that's been loaned out to buy real estate, okay? So yeah, you can invest in real estate with retirement funds, all right? Not through a 401k, because if you're working at your job, you need to quit your job in order to get those funds out of there, okay? So the 130 something, about 135,000 if I remember correctly, into 2 real estate notes from an IRA that I worked at previous jobs, okay? So it's not my 401k that I'm actually currently working for the job I'm working for. So the IRA money I rolled into a solo 401k, which got funded by an LLC that I flip houses in, okay? So in order to open a solo 401k up, you need a legitimate business, all right? So you can basically sponsor a solo 401k. I'm gonna talk about that in another video, but so I love investing in with real estate, with retirement funds, because here I make about $1,100 a month on just those 2 notes. So, and that's how much is that? About $13,000 a year that gets generated in tax. It's tax deferred, but that's fine. It's good income. It's about 7.5%. So I don't have all my money into real estate notes because I want to diversify, right? So let's go ahead and look at the next size here, real estate flips. Okay, 13% of my money is into real estate flips here. Talk about those in a minute here. So $174,000. I have 2 flips going on right now in Florida. I haven't really done any videos on it, and I really need to, but my real goal is about $100,000 into flips, because in Florida you can buy a house for about 60. Put 20 into it and you can sell, make 20. But it just so happens that I got into 2 right now, and then it's about $174,000. That's also taxable account, okay? That's all money that I just had outside of tax deferred accounts that I invested into real estate flips. So I do try to flip at least 1 house a year to have legitimate income to my LLC so I can keep my sponsored solo 401k open. All right. Now there's technically no, rule saying that you have to contribute to the solo 401k every year. But I try to at least contribute to it every year if I can. This year I'm not going to be able to, but that's fine. I'll max out my 401k at $19,000. So I'm not going to be able to sell any of these houses this year. I'm going to basically do another video on those flips, but we ran into some issues on those, and I'll talk about that in another video. So let's go ahead and look at the next size here. That's 10%. That's brokerage accounts taxable. Okay. Brokerage accounts are taxable. I got about $128,000 just in brokerage accounts, all right? And those are kind of split out between 3 different accounts. Okay, I have a TD Ameritrade account, I have an M1 Finance account, and then I have my main IB trading account, all right? So let's just pop those up here. So there's the taxable DRIP account. I use that for DRIPs. I will probably build this account up. It's got $17,000 in it right now because I transferred that $10,000 to the M1. And I only did that because TD Ameritrade went 0 commissions now. So I will probably be building that up to some longer term holds and try to diversify a little bit if I can in that a little bit. I like the way that TD Ameritrade lets you get fractional shares, but it also lets you control, where those drips go. You can, funnel, if you had 10 stocks in there and they all were dividend payers, you could funnel all 10 of those stocks into just one stock if you wanted to. And I like that. So, and it's 0 commissions now, don't have trading windows and all that. I am going to be keeping my TD Ameritrade account. I'm going to be go ahead and keeping my M1 Finance account as well. So here's the M1 Finance account. Those are the how much money I have in there right now is $8,500 invested, $1,500 just sitting around. I will probably contribute to this account every single month as well. But I had $10,000 just sitting there, not doing anything for me. So I figured I'd move that over to TD Ameritrade account. So those are the investments I have in there. I will probably do an update soon on the M1 Finance. I'm going to be switching this up probably first thing January 1st, 2020. I will be staying with the Vanguards probably, but I'm probably going to break that VTI out into the individual sectors. That way I have better control over it. So, and then, lastly, I have the Interactive Brokers account, which you've all seen me many a times talk about. $100,000 in that account, okay? That is not used for long-term holds at all. I try to just mess around that account. And, like I've talked about many times, as long as I make that 4% minimum, because if I had dividend stocks in there, getting more than 4% is pretty tough. So, and my withdrawal rate for retirement is 3.5 anyway. So if I make that 4%, I'm doing good. And this year I'm way up, making, I think I've made $6,200 this year. So I'm pretty much ahead of schedule. And, I don't have a bunch of money at risk either, right? So if I was into $100,000 worth of stocks in there, yes, diversified. But if the market goes down 50% or 30%, then that basically just cuts down my money, right? So I'm still not making more than $6,000 like I've made this year already, right? So if I can make $6,000 without having a lot of money at risk all the time, then that's a win-win in my opinion, right? I still have core investments. I have my real estate, I have my flips that I do, right? I have my real estate notes, I should have said, that generates me a good income, right? Not to mention I'm invested into a solo 401k. In that portfolio, I've also invested in my 401k, all right? That's invested in stocks as well, right? So it's not that I'm not invested in the stock market at all. I invested quite a big substantial amount in the stock market. But I don't want to invest at all. I want to have some money laying around to buy up opportunities when we hit the next recession. So if that means real estate or stocks, that's what I'm going to go ahead and be doing. Okay. So that's basically what all the breakdown of my brokerage accounts there. So let's go ahead and drop down to the next biggest one here, which is the money markets. Okay. That's taxable. I do get 1.9% of my Capital One money market account. All right. So I have, $74,000 in that account right now. Actually, technically, there's about $91,000 in there. Now, that extra $26,000 I've been setting aside for the taxes that I owe. I just made a $19,000 quarterly payment to the IRS. I owe another $40,000 or so to the IRS. Is my guesstimate for this tax season. So I will be making another payment come January, and then I'll make the last payment in April. I'm just trying to reduce those fines that they, they basically fine you if you're, way under payment. So I'm trying to make those quarterly payments the best I can. This was an odd year. I did sell a house and made quite a bit of money on it. So, but in general, my interest on those notes, that's about almost $40,000 of income I have from it. So I have to pay taxes on those every year, right? Not to mention my carryback. I got to pay back the depreciation on that. I got to pay back the capital gains on that, plus the interest on that. All right. So, and I have a W-2 job, right? So, yes, I have money coming out of my W-2 paycheck that pretty much covers what I would make for my W-2 job, but it doesn't account for all this other income that I have, which puts me over the 200K mark, which usually I get hit with that NIIT as well. So pretty much every month I put money into the money market account, and I'll put it into other investments as well, but I also set aside tax money as well. About $2,000 a month right now I set aside for taxes as well. I'm collecting that 1.9% on it, which is kind of just being offset if the IRS does fine me for being underpayment as well, but at least it won't be a complete waste. So next size up, let's see, number 6% here is I guess that was the money market. Fundrise would be the next one up, and that's that little 1%er there. So you guys probably seen me talk about Fundrise. I have $15,000 in that account. It does generate me about $700 a year. It has come down slightly a little bit. I have made some mistakes in that account. I haven't really talked about it yet. I'm going to do an update video on that. But I am okay. I'm happy with that account. I wish I could start over with it. I've still invested $15,000 with them. It's not that I don't like the platform, but I learned some things. And for me, I want strictly more debt if I can have it, to have a stable dividend income if I can have it. And I kind of screwed up and put it in some other funds that I shouldn't have really put it in. But anyways, $15,000 in the Fundrise. That's a 1% of my net worth there. Next size up here, basically a little 1%er is metals. Okay. And I've talked about this before. Metals, they had that 10,500 into silver, all right, 600 ounces roughly. In spots like what, $17.63 or something currently. So I'm not a huge metals person at all, so but I have a little bit. Anyways, last one, roughly about 0 to 1% is Lending Club. Not a very lot in Lending Club, okay, $2,000. It's more of just something to play around with, make some content on it. There is a lot of Lending Club followers here, and make sure it's just a valid platform. Obviously, it's not a big part of my net worth at all, but it is kind of fun to just play around with. So overall, October 2020, my net worth is $1.32 million. So this really hasn't gone up for the last 2 months or so because I've been funneling so much money into the tax payments that I'm going to be paying. So I pretty much got a handle on that. So pretty much going forward, November, December, and through all the way through April, it should start going back up. And as I get that 40,000 set aside, I'm about 30 right now for those tax payments for April. So yeah, my goal is to be right around the 1.5 million mark by roughly maybe 18 months or so. I haven't really talked about that yet. It's pretty much because it's going to depend on a lot on the customer that I work for, and there's a big project they want me to work, and I don't know when that's going to be, but ideally I would love to retire in May-ish of 2021, and then you will see me making some AT videos as I through hike the AT. So anyways, that is an update. If you have any specific questions about anything I've talked about in this video, I wanted to be transparent in everything I'm invested in, because the videos that I've made in the past it's not that it hides everything, it's just that you only see me do update videos on my brokerage accounts or something like that. So, and you don't see me invested in anything, right? So you assume that I'm not invested in the market. You assume that I invest, $50,000 into CVS like I had recently, right? That's $100,000. If I lost that, I'll be okay. I'm not gonna, go, hungry or starve or anything like that. That is a play account. It's real money. I'm not too worried about it. I mean, I don't want to lose $100,000. Don't get me wrong, but you know, I'm not going to be broke if I lose it. Okay, so. But I still invest in solid companies. I don't ever recommend anybody follow what I do exactly. If you have any questions or anything like that, go ahead and certainly ask me. But just know that I have real investments here that generate income from me. And those brokerage accounts are basically to generate income with the least amount of risk that I can possibly get. Okay, so with that, this video is quite long, so let's go ahead and end this video. So I do appreciate everybody watching, and we'll see you in the next video. Thanks a lot.